Today we will be talking about the leisure and hospitality sector. And first of all, we'll identify what areas Sharia-compliant investors can invest. And then we'll try to understand the key dynamics which are impacting this sector. So first of all, the sector includes hotels. Now, hotels per se are just a place where you rent a room to sleep for the night. However, because of the ancillary revenues of the hotels, typically linked to the sale of alcoholic beverages, it's always been a very difficult area for Sharia-compliant investors to enter, even though the revenues might be of owning a hotel might be quite attractive. So in general, when Sharia-compliant investors want to invest in a hotel, it will either take control of the hotel, so it becomes an operator as well, or it has its own operator, and it can control what sort of goods and services are provided out of the premises. So we have example of, especially in Saudi Arabia, of hotel chains which don't sell alcohol. I mean, in Saudi Arabia, you cannot sell alcohol anyway. But in general, if one hotel chain from Saudi Arabia were to go to operate a hotel outside of Saudi Arabia, it will presumably adopt the same policy. When an investor decides just to own the property and lease it on a long-term basis to an operator, it has to understand what the operator is going to do with that asset. So typically, Sharia-compliant investors will operate in the low-star hotels, like 2 to 3 stars, limited services hotels, where there is literally a bed and breakfast type of service, and where the revenues from alcohol either do not exist at all, okay, or they are a very, very small percentage. This sector is actually quite large. Okay, there are a number of hotel chains like Premier Inn, Holiday Inn, Travel Lodge, where, for example, they've removed the minibars altogether from the rooms, and they just provide a very basic and essential service. So it's actually quite easy to invest in that space. When we go to 5-star hotels, then it becomes very difficult, because even 10 or 15% of the revenues of the hotel might be associated to the sale of alcohol and beverages, primarily alcoholic beverages. So it's very, very difficult for a Sharia-compliant investor to invest in that side of the high end of the market. Another much easier way to invest in the hospitality sectors are the serviced apartments. And indeed, there is a big trend towards this type of accommodation as opposed to hotels. And this trend is evident in the last 2 years as we come out of the pandemic. So basically, the serviced apartments can be used for a business trip, okay, so it will be a corporate use, or for pleasure, for you decide to go on a holiday, and instead of booking a hotel, you book an apartment. Just think about the growth of platforms like Booking.com, Airbnb, where these apartments are available. And now, especially during the pandemic, what has happened is that when people travel, they don't travel anymore for 1 or 2 days, because, for example, they may test positive for COVID, so they might have to stay 1 week, 2 weeks, 3 weeks in isolation. So that there has been a boom of bookings in serviced apartments. And indeed, this seems to be a permanent trend. I mean, people want the comfort, they want space, and when a serviced apartments offers much more space, the same level of comfort, the same level of interior decoration of a hotel. You have today Deliveroo that gives you room service. You can understand why it makes much more sense to be in a service apartment than just in a small room, like a study in a hotel. Especially if you are traveling with the family, with young kids, you don't want to stay in a single room. The entertainment parks is actually a very interesting investment. These are theme parks, I don't know, Disneyland, if it is available. There are other parks, and there are operators that need capital to buy the asset, and rather than borrowing money from a bank, they may go to a real estate investor and give a very, very long lease. Okay, so again here, I mean, there is a major issue. I mean, in providing rides and merry-go-rounds to kids from a Sharia point of view. In fact, these are widely available in the Muslim world and internationally. Also, as you know, the sale of alcohol it's non-existent into these parks because primarily they are destinations for families. Resorts becomes very difficult, very challenging. Okay, so the resort, it's a hotel, but there is a whole sort. There is a much wider area. Okay, so it's extremely difficult to invest in resorts for Sharia compliant investors because these are primarily for leisure, and the sale of alcohol is extremely high. However, again, there might be resorts where the operator decides to be Sharia compliant, and it will reduce the sale of alcohol. In some cases, they might even have a segregation of the pools. So one for the ladies and the kids, and the other for the gentlemen. But very difficult. Health clubs, instead, it's a very interesting, investment proposition. Again, there are private equity firms and chains that are expanding very fast, and they require premises. And as a real estate investor, you end up with a very long lease, 25, 35 years, to the chain. Now, of course, you want to make sure that the chain is in good financial health, the business is going well, because it's not easy to replace one operator with another operator. Here again, you also have to be mindful of the trends and in the fitness. So before it was all about lifting weights and running on these treadmills. Nowadays it's becoming more about the classes. People use it almost as a joining place. It's a stretching classes, a Pilates classes. So you have to make sure that the operator is keeping up with the trends in the fitness area. But with, as you know, health is a primary concern for individuals. People realize that obesity is a main problem, so they want to stay fit, and the health clubs fitness clubs are the places where you can actually have the proper advice to rebalance your lifestyle. And finally, adventure parks. I keep them separate from the entertainment parks because these are really open air. These are parks, okay, with a lot of zip lines and obstacles training for the kids. Again, there are private equity operators that that operate these parks, but they do not have the capital to buy. Especially, they might not be sufficiently capitalized. The banks will not provide them that sort of loans. So the best thing for them is to go to a real estate investor and take, say, 50-year lease on the park. For the real estate investor, as long as they are comfortable with the credit rating of the operator, the business model, and sustainable, it becomes an extremely reliable source of income. Now, I will provide in the next few pages some really deep dive of the trends in the various sectors. Okay. Now here for the hotel sector, okay, I have looked at the global hotel investment volumes up to 2020. The pandemic has really affected investments in this sector. Okay, and I have a slide further to look at what is the future of this. But here, what I wanted to point out is that from prior to the financial crisis, there was a huge amount of capital going into the sector. Okay, then we had the financial crisis. There was a severe downturn, and then you have a good growth. Okay, all the way to 2020. Now, when we look at the hotel sector, we also have to understand the dynamics. So there are business travelers and there are tourists. Okay, so the investments in the hotel sectors address certain dynamics of international and national travelers. Within the hotel sectors, there are big chains, the Marriott, the Hiltons, okay, and there are small private equity owned or even family owned operators. All of them require real estate. And in this particular sector, traditionally, there has been a segregation between the ownership and of the hotel and the ownership of the operator. Okay, so it's very, very rare internationally to find operators owning their own hotels. It's typically separated. So this has given the possibility, has created a standalone asset class with its own dynamics. Now, again, according to the bargaining power of the operator, so the security of the income may be greater or lower. Okay, so for example, taking an operator like Hilton, you might find that they are willing to manage the asset, and they will take a fixed fee of managing the asset, and the hotel owner will have a full variability, a full exposure to the occupancy of the hotel. In other cases, like let's say a Travelodge, Ibis House, they have a much lower bargaining power. So the real estate, the landlord will be able to secure a 20 to 25 year lease with a fixed rental escalation linked to inflation. Okay, so that is really the bargaining power. Now, of course, you have the risk, like in the case of a Travelodge, that the operator can turn around and say, sorry, we do not have any guests in our hotel, so we have to suspend the payment. Then you need to enter into a negotiation on how to recover if you are going to recover the rents. But that is basically the dynamic of the sector. When we go to the adventure parks, again, there are private equity firms investing into these sectors, and you can see here I've taken the UK, the millions of pounds which are generated by the sectors. I mean, from 611 million pounds in 2008, in 2019, the year before the pandemic, we were at 982 million pounds. Now, this is substantially dropped in 2020 and 2021, but as the economies reopen, there is absolutely no fundamental change in the dynamics of the use of these parks. People still will want to go there in the weekends with the school holidays, school trips. So it's people like more and more to be outdoor rather than in a arcade playing video games. So you like to bring your kids outdoor. So this trend, this sector will continue to thrive. Now, I take a step back to the future of this sector, specifically the hotel sector. Okay, the international tourism has been growing inexorably in parallel with the globalization of the economies. So from 1950s, which is basically when the Second World War a couple of years after the Second World War ended, to all the way to 2020, it was a one-way, the growth of international tourism. And the international tourists are the main driver of demand of hotels at aggregate level. Now, clearly in 2020, there was a huge drop. Okay, we went back to 1980s level of international tourists. And that persisted in 2011. Now, the big question is, will the international tourists come back in 2022? Well, if nothing had happened in terms of geopolitical balance, I would safely assume that that will be the case. Okay. However, with the geopolitical tensions that we are living these days, we are in March 2022. We might. There is a big question mark. Okay, will Chinese, will Russians continue to come and visit Europe? Will continue to visit America? That's a big question mark. So these numbers are very uncertain. So the growth, the future projections are very uncertain. And this question has been asked to the hotel operator in Africa, in America, in the Middle East. And this was before this survey was conducted in January 2022. So the question was asked, when do you think the international tourists will come back to pre-pandemic levels? So people were expecting 2023, 2024. Okay, I suspect that if the same question is going to be posed today or in 1 month's time, we might see much longer days. Okay, so what is the flip side of the fall in demand of international tourists? Is the rise of staycations. So people rediscovering their own country and taking holiday breaks in their own country. So you can see that in domestic holidays and leisure trips, the United Kingdom increased by 59%. Now within Europe, probably, international travel within the European Union will remain. Okay, in the Americas will remain, between America and Europe will remain. The big question mark is from Asia towards Europe and America. That's it's a big question mark. So we will see certainly a change in the dynamics of the hospitality and the leisure sector in the next few years, which is not to say that it's not a good sector to invest. Okay, but whenever we invest, we will have to bear in mind the dynamics of the demand of the assets in which we are buying.